Good morning, good afternoon, and good evening to all of you guys, depending on whatever perspective, time frames, and in locations you guys are based. I hope all of you are well, and I want to sincerely thank to all of you for taking the time out today, and as always, attending our weekly webinar, which is an opportunity for you guys to learn the stock market, to learn how to trade, to learn the best strategies that really work. So I'm glad to have all of you on board over here, and I look forward to answer your questions during this entire webinar. So feel free to keep posting all the questions as we go through. Now, let's move on to a little bit of an intro about myself and then a few questions for you. My name is Naeem Aslam. I work as a Chief Market Analyst for AvaTrade. My wealth of experience spans well over 15 years of trading experience. I worked with Bank of New York Mellon. I have also worked with Bank of New York, Bank of America in equity trading, and at AvaTrade, I had the market research department. So that's a little bit about myself, and every day the research that you read or the notes that you read, the videos, they are done by myself, and I hope that they are very useful for you guys. In addition to it, if you guys want me to do something special, the best way to do that is to tweet back and say, have that conversation with me, that what you guys really like to do and what you guys really like me to talk about, and then how that can really help. Because the purpose of me being here is to help you, is to shape up your strategy, and to make sure that you have enough information and tools at hand that you can really deploy. So that's pretty much about that. So now, in a series of a few questions about you folks, so let's begin by asking the first elementary question, which is, have you guys attended any of my previous webinars? Please say yes if you have, and no if you haven't. Okay, so I see some of the familiar names, and okay, so don't worry if you haven't, and because all of these webinars, they are recorded, and the recording can be found on our YouTube channel, which I will show you guys in a bit. Now, I'm going to quickly go through two questions more, and then with a bit of a housekeeping. The second question is, please say yes if you have been trading for under a year. All right, okay. And if you have been trading over 2 years, please also say yes. All right, okay. As always, as I expected, a bit of a mix of a crowd over here with us as always. And that is good to have it anyways, because I like, I just need to change the date over here. I thought that I had it. Okay. So, all right, so let's get back to the most important part of this, which is disclaimer. So anything which will be discussed in this particular webinar cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own advisors. This is only for information and education purposes only. Now, in terms of you guys to make contact, to interact with me or interact on our YouTube channel, the details are right in front of you guys. Guys, as always, I say in every single webinar that I hold that it is essential and critical for you guys to be on Twitter. If you are not, please make sure that you are on Twitter. Why? Because if you are trading a stock market, if you are trading a forex market, and then you see a sudden move, and by the way, some of that is likely to happen today, especially in the commodity space, because what we are expecting is you know, big hurricane hitting the US coast, and that is likely to have an impact on crude. So all of that information can be relayed, and you can achieve all that information completely free on Twitter. So my handle is right in front of you, as you can see, and of course the AvaTrade's handle is there as well. And it is essential for you guys, because when you are trading and when you see any big moves, you'll have all that information given to you guys straight as a form of a notification on your mobile, and the tweet will tell you that why that move has happened. So it is quite an important one. And secondly, on a daily basis, we do two different sort of videos. One first is the fundamental video, where I break down all the information for you guys in a very digestible way. You guys can go through that and then understand it. And secondly, there is a technical video as well, which is a little bit of an advanced video, but still breaks down the elementary concept of trading and how to really form a strategy around that. So that's pretty much about that. Now let's move on to our agenda, what we are going to discuss. Now, in terms of our webinar today, we will talk about why to trade indices, the inverse of indices, the fund flow, defining levels, defining strategy, and of course the levels within that. Now, why to trade indices? Now, for those of you guys who have attended any of the previous webinars, let me actually, first of all, let me just show you guys that how to interact and how to find us on Twitter. So this is my Twitter handle, as you can see right in front of you. So go over there, feel free to follow if you like. And then you see like this kind of information. This is a very interesting chart. So what this chart is really telling you, over here in the blue line, this is the Federal Reserve, the central bank over in America. This is their balance sheet. As you can see that it is really increasing in trillion. It is on the left hand side. And then this white line that you see is also the global stock market. So you can see that how the Fed balance sheet increased substantially from March to this level, and at the same time the stock market also increased, global stock market also increased. So this clearly indicates that, you know what, this particular coronavirus stock market rally is very much fueled by the Federal Reserve's balance sheet. And this is why, you know, these sort of information is quite useful. And then you have, you know, the small daily videos on here. And when it comes to AvaTrade's Twitter, I wanted to emphasize that you are following the right account, because we are verified on Twitter. So make sure that you are not following any bogus, any wrong accounts. You are following the ones which have the which is verified, and our account has that tick sign. Now, in terms of AvaTrade, it's a YouTube channel. You can go to YouTube, and then here are all the videos. This webinar again will be posted over here as well. Now, let's get back to our presentation and the agenda. Now, in order for you, why you want to trade indices, the reason that one may want to trade indices is because, you know, think of Nasdaq. Nasdaq is an index for a tech stock, right? Now, how many stocks out of a technology stocks can you really trade? Because, you know, one of the watch lists that I have on my platform is, let me just show you guys, is right over here, right? So this is my list, and as you can see, you have stocks like Apple, Google, Amazon, Facebook, so on and so forth. So the list kind of really goes on and on and on. So how many stocks can you really buy with a small fund? So it's not really that possible for you to have Apple, Facebook, Google, Alphabet, you know, Tesla, and all of these stocks in your account with a smaller capital. But when you buy Nasdaq, what happened is then that you automatically get this exposure to all the main energy tech stocks. It's similarly that when you buy Dow Jones, you get exposure directly to top 30 Dow Jones stocks. So what that does is that you don't have to own individual stocks then when you buy Dow Jones, because you already have an exposure within that. Similarly, when you buy S&P 500 index, you know, you have an exposure to all the S&P 500 top stocks, and then you don't have to own separate stocks. So that is the beauty about it. The second beauty about trading indices is the moves are quite substantial. the daily moves are quite big, so that is pretty good as well. Now the inverse of indices is, this is basically, there are certain ETFs which track the inverse of that. So basically, they show that if investors are leaving the stock market or if investors are going into the stock market. So if the S&P 500 index moves higher, then the inverse of that index, any product, that will move lower. So that kind of, sometimes investors do use that as a hedge against a strategy, against whatever strategy that they have. So if they wanted to go long on the S&P 500 index, they may wanted to use the inverse of the S&P 500 index to cover their losses. So in case if the long trade doesn't work, then they have a hedge on the inverse index. Again, this is a very complex topic, so I don't want it to go too much of it. I wanted to keep it something very similar, easy and digestible. The fund flow is very important. I will show you that in a bit. The fund flow, what it does is it shows that, okay, are investors going into the market as the market goes up, or are investors going out of the market, taking the money out while the market is making higher high or higher low, right? So that's sort of a concept with that. Now, let me show you the our MT4 platform to begin with, and then see what exactly we are looking at. Now, when we look at the, are we so far clear? Because I don't really see. If you do, do you guys have any questions up to so far? Like, because I see that there are so many newbies over here as well with us, so I just wanted to make sure that everyone understands what we are really talking about. So if you have any questions, interested in details about Nasdaq, okay, no problem. We will have a look at the Nasdaq a little bit more. Okay, so let me just get rid of this one. And Dow Jones. Okay, is there a replay of this recording? Because I like to watch it again. Yes, for sure. The replay will be on YouTube channel, so you will see that. No problem at all. Everything will be there. So what we are talking about with respect to the Nasdaq Index. So let's begin by talking about the Nasdaq Index. Something that really worries me about Nasdaq Index is on a weekly chart. We have three different indices. First of all, we have the 50-week simple moving average. If you don't know how to put that average, you just go over here, you go into indicators, you put to trend, and then you click on moving average, and then you change the numbers. So this one is relating to this one, which is 200-week moving average, and then this one is obviously your 100-week moving average. This is your 50-week moving average, and over here you can change whether you want exponential, simple, smooth, linear. I tend to use always simple moving average, or smooth is pretty much the same as well, not much difference there. Now, what I kind of wanted to relay over here was that look how far the price has gone from its 50-week moving average. This particular price trend that we are seeing is, excuse me, is something very, very similar that we've experienced during the dot-com. You see like that? Did the dot-com really happen in here? You see that the move really happened, and then after that rally. So what we can say by looking at the monthly chart, because now right now I'm on the monthly chart, is that this 50-week moving average, simple moving average, can really act as a good line of support for this one. But this movement that we are seeing on a monthly basis, which is just going like a lunatic movement, if I'm not wrong in saying that, then that really means that, if you are trading Nasdaq Index, a retracement is due. There's no doubt about that. Does that make sense to you? The retracement is due because when the market starts to explode at this angle, it is highly likely for the prices to retrace. And how big that retracement could be? For the 50-week moving average, it says that the 50-week moving average has been a very, very good, because now this is a 50 month, actually not even a week, because now we've gone into a monthly time frame, has been a very, very good indicator, because every time the price comes close to this moving average, we have pretty much assurance that price is likely to move away. So this happened right over here, just in between. The time frame for this one was back in 2018, and then after 2 years, which is 2020, in March we had another one. So we still have 2 more years for the retracement to happen, but that doesn't mean that this Nasdaq index isn't really going to retrace. It's going to continue like that. That's not possible. This index really needs to retrace a little bit, and that could be a consolidation in a very sideways movement, or a movement to the downside and then explosion to the upside. So when we look at the weekly chart of the for the Nasdaq index, the immediate retracement level that I'm really looking at, for this particular index, is to come at least in this area of support. At least hit this area of support, the one that I'm drawing it right over here, as you can see. So that could be a very good area, 10,000 to 11,000 area. If the price comes back in here, then that could be an opportunity. Otherwise, what one can do is go into a daily time frame. When you go into a daily time frame, if you wanted to target the move to the upside, right? You may want to place your stop loss just under the recent higher low. The recent higher low is sitting right over here. This is the recent higher low, or a better higher low is obviously over here, but the much better level is obviously your 50-day moving average, which is where our support zone is really sitting. So that is the level that we kind of really wanted to focus on. But in terms of that, this is what we are really looking at. Now, if you are wondering what type of stocks does Nasdaq really hold, then here are your top 100 stocks in Nasdaq. I'm going to show you right over here. I'm going to expand this one just to show you. So you can see from here that the stocks in the top Nasdaq 100 are right over here. So your Apple is without a doubt right over there. The second one is Adobe, and then the list just continues from like eBay, and then you have Exelon, and then you have Expedia as well. Then you have Facebook. So there are so many names. Gilead Science. There are so many names that you just get exposure directly by buying into this one, by buying the Nasdaq 100 index. Similarly, if we look at the Dow Jones Index, the Dow Jones Index top 30 constituents are Apple, first of all, then you have American Express, then you have BA, which is your Boeing, then you have Caterpillar, Cisco, CVX Pharmacy, Disney, then you have Dow Chemicals, then you have Goldman Sachs, and then you have Home Depot, IBM, Intel, Johnson & Johnson, JP Morgan, then you have Coca-Cola, McDonald's, and then 3MM. And after that, you have Mercer, Microsoft, Nike, Pfizer, Procter & Gamble, and then after that is Raytheon Technology, TRV, Travelers, Visa, then you have Verizon. After that, you have Walgreens Boots, Walmart, Exxon, which is your Exxon. So you can see that all of these stocks, by buying the Dow Jones Index and the Nasdaq Index, you get an exposure to all of these big stock names, which we really see them over here. So that is the beauty about buying them. And similarly, the list goes on for the S&P 500 index as well. Again, these things are something that you can see. Now we're going to move on to the next part of that, which is defining the levels. So we have already defined the levels for this one in terms of a support. Now, in terms of the S&P 500 index, where is the critical level of support? So for me, first of all, again, these smooth moving averages are the same. This is your 50-day, this is your 100-day, this is your 200-day. For me, the important support level when I look at the index is right over here. I think the retracement once again is due for the S&P 500 index as well, but we don't know when that retracement is going to come. but I believe that if there, whenever there is a retracement, this level that I have defined on the chart serves as a good purpose for us to have a look at it. And then if the price does come in here, then we can potentially see the price, to go long if we are already not long. Then the second potential level, if that doesn't really work, for me is really going to be near the 100-day moving average, and also right over here as well. Because when I am defining levels, I don't only look at the moving average, I also look on the left hand side and I look at the price action. What I kind of wanted to see is, you know, either a continuation of upward trend or either a confirmation that yes, the price is holding this level. Like over here, the price went up, went down again, but it confirmed that yes, this is a good level, and then we had this explosive rally. So these are the kind of things that I really look at in terms of when I define the support and resistance level. Now, in terms of a resistance, when it comes to the S&P 500 index, and when we're talking about the S&P 500 index, in terms of that, what I'm really looking at in for a price target for the S&P 500 index is nothing less than the even number of 3,500 or 550. So that is the level of a resistance that I'm really looking at if you are already in the trade, because you may want to continue to hold this one. Now, what about the Dow Jones? Let me just have a quick look at some of the questions, because I'm sure that many of the questions would be there. Julian, the answer to your question is yes. The question was, when we measure the distance of the last retracement, we are close to have the same distance now in the current rally. Yes. The Nasdaq. Then there was a question about. Sorry, let me just see. The strong movement has mostly been driven by a few really big tech firms. Agreed. Only few big term stocks have been driving that. Where do you get your 3,500 resistance for S&P 500? It's a round number, and I like to look at the round numbers, because when we are in a new territory of a stock market, and when there is no precedence, meaning there is no clarity of, there's no record of a previous highs, then what we really kind of wanted to look at is the round numbers. So after 3,500, I'm looking at 4,000 mark. That is the mark that I'm really talking about. And then if you have seen any of our daily videos, we talked about the potential for the S&P 500 index to move higher by another 20%. And how that 20% move has really been measured, or it's been looked at, is by looking at the follow. So this from here to here is a one cycle, right? So price was here, it came here, and then it went here. So this is the one cycle, just like that, right? It's a price completed. Now, when we project this one, the highs and lows of this one from this particular point on the top, it really takes the price level to 4,500 mark. And that means that, that is the next potential of this bull cycle, if this bull cycle really continues at its current momentum. Of course, we can see some retracements. I'm not saying that we're gonna move like the way that we have been moving like this. It won't happen like that. I think the weekly chart again shows the price has gone way too far and too fast. So retracement is due, and we are waiting for the retracement for this one. But if that retracement doesn't happen, we are happy to hold the prices to continue their journey to this side. Now, for the Dow Jones Index, as I've shown you the 30 stocks, the level that I'm really very much focused on with respect to the Dow Jones Index is its all-time high, as you can see in front of you, which is about 29,166 to 29,500 something, right? So this is the level that I'm really looking at, and the price has been hesitating to go over that, because this week's price action shows that we are way off the highs of this week. Yes, we are only midweek, and there's still 2 more days left for this particular week, but the fact is that we are off the highs of this week. Depending on the close of this week and how the price performs next week, this could be the top of this particular rally. but it doesn't seem like it. It seems like it that yes, the retracement may happen, and then we are still likely to test the all-time high, the high which was formed before the COVID-19 hit our entire world and then created this huge chaos. Now, in terms of a support level on a daily time frame, what I'm really looking at is that this level is really sticking out for me right over here. Is this level, right, and starting from here, and then I'm going to look at the price all the way to this. So it is this area of consolidation, because the price kind of went up, bit of a consolidation, retest, and then the retest happened from the near 200-day moving average and the big boom happened. So for me, it is this area of support that I'm really looking at if the price retraces. Now, obviously, we may never get to this point because this is still quite far. So if that happens, then the next area of support that I'm really looking at is the previous area of resistance, and somewhere where the price kind of stays above the 50-day moving average. So it is these two double tops which have been previous resistance. Now they can really act as a support, and that area of support is going to be just below this consolidation area, and it is also likely to be above the 50-day moving average, because if it breaks the 50-day moving average, then we are really looking at these levels, the one that I have defined them before. Now, does that make sense to you guys? Any questions in around that? So there's a question is that the cycle is previous high. So Julian, the question was that if the projection of the S&P 500 index is the pre coronavirus high, that is the high that we're really looking at. So let me just draw that to make it a little bit more clear for you guys. So let's say that the cycle that we are talking about right now is really the high from here to here, right? Now, in order to draw the high from here to here, I have to draw this trend line, right? So that's the trend line. Now, once I have drawn that, then I'm going to project that to the upside, right? Because this is one cycle. Cycle starts from here and it goes all the way to here, back to here. So that's this one cycle. And if it happens, you can see that the price is already above the 4,500 mark. All right. So, okay, so now we will quickly shift the focus into our European indices as well and have a look at those European indices with respect to their moving averages. Now, what you're seeing is you're seeing three different charts. First of all, this is your FTSE 100, CAC 40, FTSE MIB. When we look at that, we can clearly see that the moving average, the time frame is weekly, and then what we see is the three different moving averages are the same. This is your 50, this is your 100, and this is your 200. It still remains the same. When we look at the price action, what comes to our mind, and which is very, very clear, is the FTSE 100 index is the weakest and the worst index among all the European indices. Because look, the CAC 40 is very close to its all the three moving averages and is trading much higher. FTSE MIB, the Italian index, is even much better. It is challenging by several different moving averages already, and it is likely to break above them. Of course, the Dax index is very, very, very positive. If you wanted to look at the Dax index, let me just pull that out for you guys over here. There we go. So you can see that the DAX index on a weekly chart has already moved above all the three moving averages. The moving averages are again the same. So it is the most positive, the most strongest index, and it is inching closer towards its all-time high, which is the pre-COVID high right over here. The price action is very similar to the Dow Jones index, right? So when we comes to the FTSE 100 index, when we look at it, if we wanted to short any index, if there is any weakness, you may want to probably short this FTSE 100 index. The level that you wanted to perhaps short this index is right over here, right below these particular candles. So 5,845, anything below that is really going to open the room for the index to go back to its COVID-19 lows, which one was formed at March 20. But in order for that to happen, the sentiment, the fundamentals really need to change significantly. Otherwise, it could be just a bit of a retracement back in here in this zone, and then boom, we start to move a little bit higher. But when it comes to this particular CAC index, the trade is wait for the price now, really, because we have a symmetrical triangle formed, which is a line from here and the line from here. So let me draw that line just to make that clear for you guys in terms of a price action. So if I draw that, annotate. Let's actually go back to our MT4 platform, and then why don't we do that over here so that we all of us can see what we really are talking about. So this is it. So when we draw the index, when we draw the symmetrical triangle, so we draw like that, and then we put another line by joining the lows. So we are pretty much joining the highs over here. We're joining pretty much the lows over here. And these symmetrical triangles, they tend to break in the direction of the trend. So the moment that we have a violation of this downward trend line, that could be your trade, and the stop loss could be placed just below the low of this one. And remember that the price is still likely to face some challenges as it comes close to these ones. So for traders who like to trade a little bit more safe, you may want the price to clear all of these obstacles first and then get back into this trade and then have a look at it from that perspective. Otherwise, I think you may want it to stay on the sidelines for the time being. Now, quickly touching the same concept over here as well with the FTSE MIB 100 index, wait for the price to move above these moving averages and then come back in and then have a look at it, that what exactly it means with respect to its price action and how far the price can really move from there. So folks, once again, thank you so much. Do not forget to follow on Twitter and ask if you have any more questions about that. Julian, sorry, didn't have enough time to do the stock 500. We'll do that next time. And yeah, well, not really sick, but thank you for your consideration. I appreciate that. Thank you so much. Daniel, don't worry about the black screens. That's just a Bloomberg terminal, but the information is very much the same. Again, if you wanted to have the YouTube link, contact your relationship managers. They'll be able to share that with you. All right, folks, thank you so much. Cheers and have a good day. Bye-bye.